He paid insurance for 20 years, and they still said no. Imagine this. For 20 years, you do everything right. You wake up, you go to work, you come home, and every single month without fail, you send a check to your insurance company. You don't question it. It's just a part of life, a safety net you've been building piece by piece for 2 decades. You believe your family is safe, your future is secure, all because of this simple, regular payment. Then, one day, the unthinkable happens. A disaster strikes, a fire, a flood, a catastrophic event. You're shaken, you're scared, but there's a flicker of hope. You remember that safety net. You rush to your insurance company for help, for the support you've been paying for all these years. But instead of a lifeline, you get a gut punch. You hear these 2 words that can destroy lives, these 2 words that change everything. Claim denied. Tonight, we're going to dive deep into a story so shocking, so unbelievable, that it will make you question everything you thought you knew about insurance. This isn't just a story, it's a nightmare that happened to real people. Stay tuned, because you'll want to hear every minute of this. Let me introduce you to the Miller family. John and Sarah Miller, a hardworking couple living in a quiet suburban neighborhood. They're the kind of people who believe in doing things the right way. They bought their home in 2005, and almost immediately they signed up for a comprehensive home insurance policy. The premium was around $300 a month. To them, it was an investment in peace of mind. They never missed a single payment. They were the perfect customers, loyal, reliable, and completely trusting. For 20 years, that $300 a month came out of their bank account like clockwork. They watched their kids grow up in that house, celebrated birthdays, and built a lifetime of memories. They genuinely believed that their insurance company was a partner in their life, a silent guardian protecting their most valuable asset. They thought they were protected. But little did they know, one hidden clause, buried deep within a document they never truly read, was about to ruin everything. They trusted their insurance blindly, and that trust was about to be put to the ultimate test. The night of the fire was a nightmare. It started in the garage, a small electrical malfunction in a freezer. By the time the Millers were alerted by their smoke detectors, it was already too late. They scrambled out of the house in their pajamas, their 2 teenage kids right behind them, and watched in horror as their entire life's work went up in smoke. They lost everything: their home, their clothes, their photo albums, the memories of a lifetime. The fire department eventually contained the blaze, but the house was a total loss. Yet, in the midst of this devastation, a small voice of reason cut through the panic. "It's okay," John told his family. "This is why we paid for 20 years. We're going to be okay." The next morning, John called the insurance company, expecting a fast, empathetic response. He expected a team of adjusters to be on their way. He expected a plan. What he got instead was the beginning of the true nightmare. John was on the phone for 45 minutes, recounting the details of the fire. The representative on the other end was cold, robotic. John expected empathy, but he got bureaucracy. After being put on hold, the representative came back with a chilling response. "Sir," she said, "we've reviewed your policy and the initial fire report. We're going to have to deny your claim." John's heart sank. He couldn't believe what he was hearing. He asked for a reason, a justification. He was a loyal customer. He paid for 20 years. The representative's answer was devastatingly simple. She cited a hidden clause about improper electrical wiring. The clause was buried in fine print, in a document over 100 pages long, a document nobody ever reads. It stated that any damage resulting from non-professional electrical work would not be covered. John had done some minor wiring work in his garage years ago. It was a simple project, replacing a faulty outlet, but the insurance company was using it as a weapon against him. Even the fire department confirmed the fire was not a result of John's work, but a flaw in the freezer itself. It didn't matter. The insurance company had their loophole, and they were ready to use it. The Millers couldn't believe it. How could 20 years of trust mean nothing? How could a hidden clause be used to negate 2 decades of payments? Refusing to accept this fate, the Miller family scraped together what little money they had left and hired a lawyer. It was a long shot, a desperate attempt to fight a corporate giant. But what their lawyer, a tenacious man named Michael, uncovered was a chilling truth far bigger than the Miller family's story. Michael spent months digging. He found other cases, other families just like the Millers who had been denied for equally absurd reasons. He discovered a pattern of behavior, a playbook used by this insurance company to systematically deny payouts, citing obscure clauses and technicalities. It was a strategy designed to save them millions. They knew that most people don't have the resources to fight back. They knew most people would just give up. And here's the part that makes this story truly horrifying. Michael's investigation revealed that this insurance company wasn't just doing this to the Millers. They had quietly denied hundreds of similar claims, carefully avoiding public attention, using these same predatory tactics over and over again. They had a team dedicated to finding loopholes, to creating fine print that would allow them to walk away from their responsibilities. They were a business that profited from disaster. The trust the Millers placed in them was never real. It was a transaction. And now, at their lowest point, that company was choosing profit over people. The Miller family did not get their home back. The lawsuit was long and emotionally draining, and in the end, they were only able to secure a partial settlement, a fraction of what they truly needed to rebuild. Financially and emotionally, they were left in tatters. Their story is a painful reminder of a difficult truth. In the world of insurance, you are not a partner. You are a liability. If you have ever trusted your insurance company blindly, if you've ever just filed away your policy without reading it, this story will make you rethink everything. So what can we learn from the Miller's nightmare? First, always read the fine print. Don't just skim it. Read every single word. If you don't understand it, get a lawyer to explain it to you. Second, consider consulting an insurance broker or legal professional before you sign any policy. Don't just rely on the company's salesperson. And finally, be aware of the horror stories. Knowing the tactics companies use to deny claims can be the one thing that saves you from a similar fate. The Miller's story is a chilling reminder. Insurance is supposed to be a safety net, but sometimes it can be a tangled web designed to trap you. Their 20 years of loyalty meant nothing to a corporation focused on the bottom line. It's a harsh lesson, but one we all need to learn. Which part of this story shocked you the most? The hidden clause, the systematic denials, or the fact that this could happen to anyone? Comment below. I want to hear your thoughts. And if you want more true insurance horror stories, if you want to arm yourself with the knowledge to protect yourself and your family, then you need to subscribe to this channel and hit that notification bell, because here on Claim Denied, we expose the nightmares so you don't have to live them. We're on a mission to reveal the truth, and the fight never ends.